Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the weekly forecast for the coming week, and we're starting off from the dollar index. This is the weekly time frame. So what we can see is the fact that price traded bearish back to the downside to retest the weekly bullish fair value gap. We can see here the second time, and then we have this bullish rejection of price to the upside. Clearly we had this liquidity void where we expected to see a retest when price returned to the fair value gap, bullish continuation to take out the relatively equal high points here, buy side liquidity. And what we can now see is that price returned back to the downside into that weekly bullish fair value gap and a bullish rejection, volume closing above this liquidity void after the mitigation of this weekly zone the second time, because this is the first mitigation of that weekly bullish fair value gap and then a bullish reaction to the upside. Now we can see bearishness. I told us to expect bearish movements to the downside 2 weeks ago. Last week there wasn't forecast, so what we can see is the bearish movement and now a bullish rejection to the upside. So clearly we can see that last week we had this bullish movement of price to the upside, and we can clearly see that volume closed above the high of this rejection candle, because this gave us a bullish rejection to the upside. And price also have traded above this up close candle before the bearish movement. So we can see this volume traded above that, above the volume of this bullish candle. So from what we are seeing here in the weekly time frame, we're having the possibility of a bullish movement, because here we have a drawn liquidity, a buy side drawn liquidity, or we can just clearly say we have a trend line buy side liquidity resting here, in which we'll be expecting to see the possibility that price would want to seek this trend line liquidity. But then when you're considering it from just the candle, this is the next drawn liquidity buy side, and then this other candle weak, this other candle high, in extension this other candle high. So from the delivery we're seeing in the weekly time frame, we're having the possibility of price going higher, even though we can see that we have bearish momentum to the downside. So from the weekly time frame, this is just clearly the narrative. Price swept sell side liquidity, also swept the sell side liquidity, and then traded above, giving us the possibility that the institutions may aim for the buy side liquidity resting here in the form of this trend line liquidity. Let's check the daily time frame. Here in the daily time frame, what we can clearly see is the level we marked from the weekly time frame, which is this liquidity void. You can see how that provided support for price and then sent price to the upside. Price took out this high point, a return to the downside back into the weekly zone, a sweep of sell side liquidity, and then bullishness to the upside. Here you can see we have a change in state of delivery, because this volume here traded above the volume of this up close candle before the bearish movement to the downside that took out the sell side liquidities. And we have here what you can see, have this bullish order block. Even though this bullish order block did not trade bullish to the upside to take out this high, we can see it's an engulfing candle, expecting to see the possibility of a bullish reaction. But then price traded below that, returned, retested that, and then continued bearish. So what we can now see is the bullish movement of price back to the upside, and this could serve as a reclaim block, meaning since this is a violated bullish order block, and now we're seeing that volume now have returned to the upside, trading above that after price traded bearish, taking out sell side liquidity resting here, mitigating the weekly bullish fair value gap the second time, and then we're having this bullish reaction. Price gave this bullish reaction, return to retest this support level, which is the liquidity void we marked from the weekly time frame, and now price again went bullish. So what we can now see is that we have this violated bullish order block, the level here, which may serve as a reclaim block. What do we mean by a reclaim block? Meaning this is a violated bullish block, but now price have returned to the upside, trading above it. So this may claim price and then send price higher to the upside. And what we can see in confluence, we have a fair value gap resting here. So clearly what I'm trying to tell us is from the daily time frame, we have the possibility of seeing bearishness to the downside, and price may dip more lower to take out this sell side liquidity, and then we have a bullish continuation to the upside. So we're trading bullish, aiming to see price comes into this fair value gap, seeking this buy side liquidity, and then we also have this other buy side liquidity, and then this buy side liquidity, which we can see we have that in the form of a trend line liquidity. So we can clearly see that we have that in the form of a trend line liquidity, in which we are expecting to see the possibility that price will seek that into this fair value gap here in the daily time frame. So whatsoever violates this close candle before the bullish movement, then that is when we can begin to really now frame the possibility of strong bearish movement to the downside. But from the narrative we are seeing here, I'm expecting the possibility of a bullish movement. I want this to reclaim price. We'll have a reclaim block here. I want to see price, how price would return to the downside. That will reclaim price and then send price to the upside. Or you could look at it this way. You have the sell movements before the buy movement to the upside. And that is clearly what we want to identify now. So we have the sell movements. We have the sell movement before the buy movements. So that is why it told us if price may dip lower to take out this low. So it means we have this, and then we can begin to look out for the possibility of a bullish model to the upside. So this is what I have to show us in the dollar index, except price decide to do otherwise, and then we have strong bearishness to the downside, and then we could continue bearish within the week. But I'm looking at bullish possibility to the upside. We have this pool of buy side liquidity. We have this fair value gap resting here. Let's check the 4-hour time frame. Here in the 4-hour time frame, what we can see is when price mitigated the weekly bullish fair value gap the second time, which is within a monthly bullish zone, we had this bullish movement. Price created this bullish order block, and we can see how price returned to retest that, and then bullish continuation, breaking above this high, and price also broke above this high points. Now, when you look at it from the 4-hour time frame, we have this market movement, this drop to the downside. Price here returns, seek the buy side liquidity and continue bearish. Now we can see that this impulsive movement broke above this bearish order block that seek this liquidity, or we could clearly say broke above this high point that seeked buy side liquidity before continuing bearish to break this low points. So price gave impulsive movement and broke above that. Hence why we could see price trade to the downside, and then we have what bullish possibility. Here in the 4-hour time frame, what you can clearly see is the fact that this is a level that aligns to the daily reclaim block we identify. And what you can see here, we have this sell movement before the buy movement that took out this bearish order block. So, you know, we also identify the possibility that price may seek the low of Thursday, where you can see here we have a pullback. So meaning this is a sell side liquidity, and in confluence here you have an inversion fair value gap. So we'll be looking forward to see how price will trade bearish to the downside, the possibility of a bearish movement, and then look forward to see if price is going to give us a buy model to continue bullish to the upside. So if should in case you want to catch bearish movement of price to the downside, and then we see price returning to the upside, this is you trying to trade now from this bearish order block. If price gives you a bearish model when price return here, that is should in case price doesn't continue bearish and we see price trading higher and price comes here and give us a sell model, then we can sell to this level and look forward to the possibility of a buy model to the upside to continue bullish to the upside. Except price decides to do otherwise, I am expecting the possibility of bullishness in the dollar index next week. So this is what I have to show us in the dollar index. Let's check out the EURUSD pair, guys. Here in EURUSD, we can see price traded into a monthly bearish fair value gap, gave us a rejection, and then bearish movement to the downside. So last week there wasn't a video forecast available in the YouTube channel, but then I actually shared a weekly perspective in the GBPUSD pair, and then I made that available in the free Telegram community. So here in EURUSD, after the mitigation of this monthly bearish fair value gap, we saw this bearish rejection to the downside, where we saw price took out this buy side liquidity. And that was where I began to frame the possibility of a bearish movement. And that was clearly a chart with detailed explanation I shared in the private Telegram community. And what we have now is in the EURUSD, we are seeing the possibility of bearish movement, just the way in the dollar index, we're seeing the possibility of a bullish movement, because we had a bullish rejection in the dollar index when price mitigated the weekly bullish fair value gap. Here in the EURUSD, price mitigated the monthly bearish fair value gap, a bearish rejection, price seek buy side liquidity, volume closed below that. And we can also see that price seek this weekly previous high points, and then we have the close of price below the high of this previous weekly candle. Now we are having this engulfing candle, bearish. and clearly here this is a rejection block. So from the weekly time frame, the narrative we are seeing is more bearish possibility, even though we know that the bias in Euro USD is bullish, just the way the bias in the dollar index is bearish. And you know they are negatively correlated pairs, in the sense that when the dollar is buying, we want to see the Euro USD selling, because the dollar in the Euro USD pair is actually the counter currency, not the base currency. So clearly now we are expecting the possibility of a bearish movement to seek the sell side here. In extension, we have the sell side here. Let's check the daily time frame. In the daily time frame, what we can clearly see is here was a sweep of the buy side in the weekly. Here in the daily, you can see volume closed above that. So that's the break of this high points. Price mitigated the monthly bearish fair value gap. We have the daily candle swept the high of the previous daily candle. And that was where I began to frame the possibility of our bearishness to the downside. First to the rejection block before we see price takes out the sell side liquidity. So what we can see here is that price traded to this key level, because this is where we have the sell candle before the bullish movement. First, price mitigated the open price of the bearish candle and went bullish. Price traded now back into the close price, and then we had what? Bullish reaction on Friday. So one of the traders shared his own chart setup in the private Telegram community, and I wasn't really so available on the chat on Friday because I had some events to attend to. So I didn't really had this proper analysis on the markets. So I also took a sell movement, which was actually me expecting to see that the London session was going to sell for a short term, and then possibly New York give us a buy movement. So clearly the buy movement was more stronger, let me put it that way. But then I also had the possibility of executing a sell movement, and that was a break-even trade. And clearly I didn't really notice that price was reacting from a key level here, because this is a down close candle before this bullish movement that took out this high point. Yes, we had price mitigated the open price, and then also price had the possibility to react from the close price also. So Friday was a buy day and not necessarily a sell day, though I had a sell movement that was a break even, leveraging also on the Forex or the setup that the trader shared in the private Telegram community. Clearly what we can see is that price actually swept the sell side liquidity on Thursday. Volume closed above that. So price was reacting at this key level. So there was a possibility to anticipate that Friday was going to be a buy day to the upside. So for the coming week, what we can see is that after price mitigated the monthly bearish fair value gap, here price created a bullish order block, even though we can see we didn't really have sustainable bullish movement to take out this high. Price violated the bullish order block and went bearish to the downside, closing below the volume and below the low of this bullish order block. So we can see the bearish volume to the downside, an impulsive bearish movement to the downside. So clearly what we'll be looking forward to is the possibility that we have a bullish movement. Price may seek this high, and then we have a bearish model to continue bearish to the downside. Looking forward to see price seek the sell side, in extension this other sell side, and we may see price trade more lower into this bullish fair value gap we have here in the daily time frame. So let's check out the 4-hour time frame in the Euro USD. We have this unmitigated bullish order block here. You can see how price reacted. Bullish rejection, swept this low, volume failed to close below that. So Friday was to expect more of a bullish movement. Anyway, I wasn't really available to look at this narrative clearly, so we can see how price traded. So I actually had myself in this bearish movement, but then price went bullish, and that was a break-even trade. And then we had this bullish movement. So here you can see this is the buy movement before this bearish impulsive movement that validated the break of this low points, in extension taking out this sell side liquidity. So we may see price continue bullish into this fair value gap zone, because now we have a bullish fair value gap here. So the market may open and price may give a reaction like this, and then we have bullish possibility to the upside. So we can look forward to see that price may give us a sell model from this zone, and then we continue bearish to the downside, or price may seek this as a buy side liquidity into this fair value gap. So our possible zone is the fact that we have this institutional order flow where price may react from, and we have the bearish movement to the downside, or price may seek Thursday high into this fair value gaps. So if you have the possibility of catching a bullish movement, then you want to catch bullish, and you may trail your stop loss, because price may seek the buy side. If we see price failing to give us a sell model, so price may seek this buy side into this fair value gaps. And then from these zones, we can begin to look at the possibility of price possibly giving us a sell model to want to go bearish to the downside. So this is what I have to show us in the Euro USD pair, guys. Let's check out the GBP USD pair. In GBP USD, if you guys can vividly remember, in one of the forecasts, we identify reaction from a monthly key zone here and then bearish movements. Price return to the upside, reacted at this unmitigated key level. This is an unretested key level, a rejection block. Price mitigated that and we saw bearish rejection. And I pointed out towards, based on the setup I shared in the free Telegram community, that on a weekly perspective, we should expect bearish continuation to seek the sell side liquidity. So what we can clearly see is the fulfillment of that delivery to the downside. Price has seek the sell side liquidity, but then we still have this unmitigated rejection block level. So we have the possibility of expecting more bearish movement to the downside also in the GBP USD. Based on the narrative we are looking at, we are seeing clearly now in the charts, after price mitigated this key level, a sweep of buy side liquidity, bearish rejection, an engulfing candle was created. I look forward to see price return into lower time frame zone for a retest and then bearish continuation to seek the sell side liquidity. So we have the possibility of further bearish movement to the downside because we can't really identify and point out a sponsorship block here that may really give us a bullish reason to the upside. Let's check the daily time frame. So here in the daily time frame, what we can clearly see is here price return. Here you can see what we have, a fair value gap. Price mitigated that fair value gap. We have a sell movement before a buy movement that seek buy side liquidity and sponsored bearish reason to the downside. So what we can now see is we have this movement bearish to the downside, and this was last 2 weeks delivery on Friday. This was the candle on Friday, I believe. And what we can see when Monday opened, price traded to the upside, retested this zone here, because here we have a sell movement before a valid buy movement to the upside that seeked this buy side liquidity and broke above that. So you can see that acted as a breaker block and then sent price lower to the downside. So we can see that we have what, bearish momentum to the downside in the GBP USD. So what we'll be looking forward to see is looking at the fact that price is reacting from this fair value gap. Let's mark that out. We are seeing price reacting from this fair value gap. Price have retested that twice. Now this is a second retest, so we could see price give us that bullish reason to the upside. And what we'll be looking forward to is, since we're expecting the possibility of a bullishness in the dollar index, so we may see this trade higher, and look forward to see if price is going to give us a sell model to continue bearish to the downside, and we'll be trading bearish into this rejection block level. Looking at what we can see here is after the mitigation of this sponsorship zone, we had bearish movements. Price gave a pullback, retested this breaker, and then bearish impulse to the downside. So we can see that price broke through this low. Possibly let's use the line chart so you can see price broke through this low point, and what you're going to see is that we have a fair value gap here. So price may come into this fair value gap, and in confluence here we have a bearish order block seeking Thursday high point, and then we have the bearish continuation. So except price decide to do otherwise and then continue bullish, I am more bearish in GBP USD. Let's check the 4-hour time frame. Here in the 4-hour time frame, what we can clearly see is this is the daily level, and here we have a 4-hour level. Clearly what we mean, this is a 4-hour institutional order flow, and what you can see is this: when price traded bearish, we had this pullback, price fell. So clearly here we have this mitigation block. So price return retested that in confluence to this fair value gap. So we could see now from the 4-hour time frame, price have traded into the GBP USD bearish fair value gap we have here. But then we could see the possibility that price may return into this bullish fair value gap, and then gives us the possibility of a bullish reason into this institutional order flow. Or we could see price seek Thursday's high as the buy side liquidity before giving us a sell model to the downside to continue bearish to the downside. Here we have an unmitigated bullish order block, and this is actually a valid bullish order block because this sponsored the impulsive movement that took out this opposing bearish order block. So this is a bearish order block. Bullish movement took out the bearish order block. So price may return to retest that to the downside here. So we may see price return to this fair value gap, sponsor bullish movements into this institutional order flow. Clearly we have this from the 4-hour time frame. So you have to look at the lower time frame. What are the models you begin to see at these zones? So price may decide to give us the model bearish here to continue to the downside, or price seeks Thursday's high points, because we also have a fair value gap resting here, and then gives us the reason to continue bearish to the downside. So I'm giving you guys the probabilities, the possibilities. I'm not telling you that price will immediately sell from this institutional order flow, but then this could serve as a buy side liquidity since we're entering a new week. So price may seek this high point before we have the bearish continuation to the downside. So I am expecting more bearish movements in the GBPUSD than a bullish reason. Except price does otherwise, then we can now change our narrative and flow with the bullish movements. So this is what I have to show us in GBPUSD. Let's check the gold pair, guys. Here in gold, from the weekly time frame, what we can see about gold is a sustainable bullish movement to the upside. Gold has been creating new all-time highs. We have series of 6 weeks of a bullish narrative to the upside. Gold failing to return to the weekly bullish fair value gaps. But then when we drop to a lower time frame, the daily, the 4-hour, the 1-hour, we'd see that there are pullbacks in the bullish movements. So let's check out the daily time frame. In the daily time frame, what we can clearly see is the fact that here gold gave us a rally, a base level, and a rally. Price return to the base level, mitigated that, and then we have this bullish continuation. Here what we can see is that we have this unmitigated week after gold traded high and took out this high. So gold mitigated that, and then we have bullish reason. Price have broken above this high. Here we have the sell movement before the buy movements. So the possibility of us expecting that gold may give us a pullback to the downside before continuing bullish is looking at the narrative that we have here, that if we're expecting a bearish pullback, then we have this sell movement before the buy movement as a level to look forward to see the possibility of a buy model to continue bullish to the upside. But in the case where gold possibly just continues bullish, why? Because what we can see is the fact that bullish movement, a bullish fair value gap here, price return mitigated that, and then we are seeing the possibility of price continuing higher because price gave an engulfing candle here, but then this return retested that but failed to continue bearish, and then we are seeing that the next candle went bullish. So our expectation would be to see the possibility that gold may pull back to the downside and then into this unmitigated candle week. And you can see in confluence is where we have the sell movements before the possibility of anticipating a buy continuation. So price may trade into that and then gives the bullish continuation to the upside. That is if we do not see a deeper pullback bearish to the downside. Let's check that from the 4-hour time frame, guys. In the 4-hour time frame, what we can clearly see is this is the level we are looking forward to in the daily. So should in case price doesn't dip to this level as an expectation for a bearish movement, this is the level we're anticipating from the daily time frame. Here in the 4-hour, we have this sell movement before the buy movement that took out this high point, and in extension we can see that's taking out this high point, meaning we have a buy side drawn liquidity resting here. Then it means that I'll be looking forward to see price create a buy model from this zone to continue bullish to the upside. That is if we do not have a sustainable bearish pullback to the daily level. So this is what I have to show us, guys, in the gold pair. This is not really a lengthy stuff in gold. Gold is just straight to the point, showing us that gold has been on a sustainable bullish movement. So we're looking more to the bullish perspective than the bearish perspective. So we would not really want to anticipate to see that it may give us a strong, deeper bearish pullback. But then if that happens, then we want to trade bearish then to the daily level. But then we have to keep in mind this sponsorship zone and expect the possibility that price may give us the bullish framework to continue bullish to the upside, aiming for the buy side liquidity. So this is what I have to show us in gold. Let's check out the USDJPY pair, guys. Here in USDJPY from the weekly time frame, we can clearly see structure is bullish because price gave a pullback, seek this sell side liquidity, bullish movement, broke through this high. Price return seeks this sell side liquidity, but price failed to continue bullish to take out this high point, and then we had a return into the rejection block that swept the sell side liquidity, and price began to give bullish narrative to the upside. we can see volume failing to trade below these lows, and then we continue having bullish rise of price to the upside. So we have a draw on liquidity buy side here. We also have this buy side. We can just regard this as relatively equal high points. What we can see is we had the sell movement here before this bullish movement that traded above the sell movements before the bullish movements. Price return mitigated the institutional order flow here and went bullish to the upside, and now price again returned to the downside, swept this low sell side, mitigating more into the bullish fair value gap. And then we can see last 2 weeks gave this bullish rejection, and then last week volume continued bullish to the upside. So we can see sell side liquidity has been taken. We have the possibility to anticipate that price will seek this buy side liquidity, and this was the delivery in the month of August, giving us an accumulation, and then now price gave us the words manipulation, seeking this, and then distribution. We're expecting a distribution that will seek a buy side liquidity. So looking at the narrative from the weekly, we're expecting bullish possibility in USDJPY. Let's check the daily time frame. In the daily time frame, what you can clearly see is based on the zones or levels marked from the weekly, we can see price respected this, went bullish. Volume have been trading to the upside, failing to violate the lows. So we had bullish movements. Here price broke those high points. Here we have the institutional order flow, the sell movement before this buy movement that took out this high. And then we had a pullback, and then price continued bullish. So you can see clearly that we had this accumulation here. And now price has given us a manipulation to the downside, seeking all of this sell side liquidity, traded into this fair value gap zone here. And now bullish reason to the upside. Price broke above the buy candle before the sell movement that took out sell side liquidity. So we have this change in state of delivery in extension and internal breaker structure. So looking at the fact that we are expecting the possibility of a bullishness, except the institution decides to want to use this to just sponsor bearish movement to the downside. But what we can see is that here we have a bearish order block here, but what we can see is that this did not really sponsor movements that broke the structural low. Price just seek liquidity. And looking at the narrative that price has been trading to the upside, we could expect to see that we have a pullback. Price may seek Thursday low into this fair value gap in confluence to this bearish order block that was violated, and then gives us a buy model to continue bullish to the upside. So I am looking more to bullish possibility in USDJPY than a bearish narrative. But then we can look forward to trade bearish to the downside, looking at the fact that price is reacting from this daily bearish order block. Let's look at the 4-hour time frame. So here in the 4-hour time frame, what we can see in the 4-hour time frame is this. This is Thursday's low point. So price may seek this low in confluence to this daily level, which we marked where the change in state of delivery occurred. So we could see price seek this low points, or price now, since we have this possibility or probability that we had a sell movement before this bullish impulse. This is where we had a sell movement before a bullish impulse that really validated the break of this high points. So we may see price trade to the downside into this and gives us a buy reason to the upside. But then since we're entering into a new week, we may expect to see price sweeps this, and then we have the bullish continuation to the upside. So this is what I have to show us for the coming week in the various pairs. Till I come your way in the next video, guys. Cheers and God bless you all.